Today we are going to be hindsight testing again with a bit of added commentary just to reassure that again, this does definitely work. These concepts do take place within this marketplace. I have nothing to hide. I am simply here to be of service. Before I do get started, I want to discuss a topic for anyone in the Discord subscription-based membership. If you are looking to participate, that has definitely been put on hold for now. A lot of people I feel aren't serious, and I feel like it's going to take me babysitting. Not necessarily babysitting, but yes, babysitting, because people don't know how to, or seem to not know how to follow rules, seem to not know how to study. Those study habits that you're supposed to develop in school obviously didn't carry on into adulthood, which is fine. That is again why you have a mentor, a guide, someone to show you and help you understand the actual power, the actual discipline you definitely carry within you. Obviously minus the excuses, minus the inconsistencies, minus the non-committal behavior, minus the inability to believe in yourself and or capabilities. I really just want to help you guys understand your actual truth. You say you want to be a trader. Well, this is the road to be a trader. This is a road to, or the road to become the, or actualize your dream, right? However, for a lot of people, it almost seems unreachable because they've been doing it for, or doing or trading Forex for this, that, in the third amount of years. I want you to understand that it only is considered a loss when you lose. I'm not talking about a trade. You only lose in Forex when you quit. So if you continue to strive and learn, educate yourself, practice your routine, practice your strategy, train your eyes to actually recognize these patterns and or market structure, there should be no reason why you should not be receiving or achieving profitability within these markets, especially with, you have a guide. Anyone who has a YouTube channel, you don't even have to have a YouTube channel at this point. If you come across this Forex channel, you have the opportunity to become that profitable Forex trader. However, I can only guide you to the water. I cannot force you to drink. I cannot force you to heal, take care of yourself, be grateful with the life you have left, take inspired action, invest in yourself, spend $130 on a monthly membership, spend $90 every 2 weeks on a monthly membership, spend $900 for a year's worth of service, literally investing in your trading career. Invest that $50, $30, maybe even $20 for one-on-one sessions. This is Forex. This is your career. This is something that you're trying to do long-term, right? Not just for, I'm guessing, until your account is blown. This is the real deal. I cannot stress this enough. And honestly, I don't care to anymore because it's here. It's right here in your face. And I'm literally explaining it to you. If you don't get it, or at least get it by now, you're in for a rude awakening because these markets show no mercy. They are very much unforgivable and will definitely leave you in a hole if you let it. If you haven't already, hit that like button, subscribe to the channel because we do post, or aim to post, consistently. Be sure to hit that post notification bell. Stay updated on all our videos. I do appreciate you guys for tuning in every day, even if y'all aren't a part of the membership yet, or just yet. Even if it's not live just yet, understand that I look forward to meeting the many of you who actually tune in, or actually paying attention, or actually, investing their time wisely, especially when, their career is on the line. This industry will leave you in a cyclical loop if you let it. You will wake up 30, 40, doing the same things, looking at the same candlesticks if you let it. Without further ado, let's go ahead and get started. So we're kind of just gonna go over an ascending channel, trend, or however you want to call it. It really doesn't matter for real. We can start right here and then work our way up, maybe catch a bit of counter trend action and then continue higher. It really just depends on time. I'm not looking to spend too much time on these charts. However, of course, time kind of goes, time flies when you're doing something you're passionate about. So who knows? Without further ado, let's go ahead and get started. Okay, so what's the first thing that we are going to pay attention to or aim to recognize within this bit of market structure? As you can see, price performs a liquidity grab, break of structure, retest. That is a choke. That would signify your strong low. Price creates a weak high, runs it, fails to break this structural high, reacts to, maybe a wick or The volume of this order block, retest, takes out internal range liquidity, obviously being an unmitigated wick, continues higher. Our range is from this low to this high. Yes, it is a weak high still. That's why it, eventually got rated. We definitely have slanted lows as well as protected higher lows. So it kind of just confirms what we are looking for. We have our POI. We have our liquidity, which again, if you want to just look closely, as you can see, we have a trend line stretched out. And even below that, we have a bit of an imbalance. And if you really look at it, that's going to be your fair value. How do I know it's a fair value? If I draw my fib, let me look at structure real quick. That looks nice. Draw my fib, we have what? A 50, fair value. It's pretty simple. So if in case you were worried about this entry, this fair value gap could be very smooth, impress your friends, maybe even your Forex guru. I mean, this is a pretty precise entry, and it's honestly ridiculous how precise. However, I mean, when you acquire the skill set, the markets become a thing of beauty, truly. Where are we targeting? Well, we have slanted highs for partials. We also have to the left a pretty decent, we'll call it internal range liquidity, because above it, what do we have? A block, right? So yeah, we just rated internal range liquidity, retest. Now, if you want to pay attention real quick, you can definitely see why it kind of made this price action behavior, even though it looks pretty ugly. I'm not gonna lie, mad ugly. However, if you really understand or take the time to comprehend what the market is kind of displaying, or the type of price action the market is displaying, as you can see, price performed a liquidity grab, break of structure. Price definitely established a weak high, ran that weak high. What is that? A liquidity grab, break of structure. Whether that's a choke, whether that's a whole structural low, it broke structure. What does that mean for this range? Strong low, weak high. Now that we have the range, all we need to do is locate internal range liquidity and react. As you can see, price established a weak high and retested, left what would be considered a footnote or a footprint in the market, 3 candle formation, a strong low, or I guess in this case a weak low. Did this low break this low or the previous low? No, so that's a weak low. Price retraces, mitigates unmitigated wick, continues lower. Where does price react off of? If you want to take your fib, draw it down, we have a 50 or fair value, maybe even a discount pricing. However, if you don't understand how to do the fib yet, if you look left, we have a breaker. Pretty smooth, pretty obvious, and definitely pretty tradable. Even if you wait for your pin bar to close, we have a retest right here. You can take this long execution, long order, stop loss above the low, we target the high. And to an extent, an unmitigated wick. Why? Is this high higher than this high? Of course not. What does that mean for this high? It's a target. Pretty smooth. 16%. I'm going to bring that down so I can actually understand what price is kind of giving us or showing us. Close that up a little bit. So within this range right here, you can see that price performed a what? We have a liquidity grab, break of structure. And on the other way around, price performed a 3 candle formation, retested, continued lower. On the lower time frame, price performed a liquidity grab, break of structure, choke, retest, continued to obviously break another structural low, which would obviously signify as your break of structure. Price continued lower. Of course, order flow had just been taking place, lower highs being confirmed. Again, this would just be counter trend. You can definitely take advantage of all these, obviously on the lower time frame. I'm going to take a pause real quick. If you guys really want me to, I would definitely go over counter trend trades. Hit that like button, like this button up. I would definitely get that video out for you as soon as possible. Moving on, price retest, takes out internal range liquidity, which happens to be what? Rejection block. We have rebalance in price or rebalancing in price. We also have what? This wick to this low. I don't like that. Why? Because it's really a near miss if you really think about it. If you really look at it, I like to put my execution order at least 5 pips above sometimes because, again, the markets are not perfect. However, if your fib doesn't ever usually come out, decent, you could obviously move it up maybe, I want to say, to the 50, right? So if you have a wick, or I'm sorry, a candle, and it's a bit like off, you can definitely adjust, and it'll just make sense. Understand that these markets are not perfect. Understand that anything is actually possible within these markets, right? So if price decides to retest and near miss, it can definitely do that. So to an extent, make it work is what I'm saying. No fib, no Fibonacci tool retracement tool, no Fibonacci retracement tool. I'm gonna say this again, is perfect. You work it. It's not just draw a fib and prices are gonna react off of it. No, 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 no. There's a certain technique, a certain skill, a certain finesse that comes with applying this skill set the correct way, right? And obviously we have internal range liquidity within this rejection block, as well as this order block, as well as this breaker. But if we look below that, if you really understand the actual, I guess you could say, market structure in price, as you can see, there's a smooth imbalance. You wouldn't even need your fib. Price inefficiency right here. S&R liquidity. Price broke, retest, rallied through pretty impulsive behavior, retested off of a counter trend, filled in that gap, and continued higher. Where's your entry? Stop loss below this rejection block. Where are we targeting? You can definitely target the high. You can definitely target the high. However, if you look behind you, you can see that we definitely have the momentum to carry us into probably another half of this expansion leg, right? So if you want to be a bit more ambitious, take your partials right here. Take your partials right here. Who cares what people think, what people say? Pay yourself, because nothing is guaranteed in these markets. Continue higher. That's 10%. 10%. A lot of people can't average 10% on a week, and you got it within a day. I'm very proud of you. So as you can see, price peaked, retested, created probably like a choke to a certain extent. Actually, I'm going to zoom in so you can understand how tradable these corrections are. We have a choke, retest, continuation, break of structure. What's next? Price needs to retrace. Where is it going to retrace? Well, where is liquidity? We have a 3 candle formation and or equal highs right here. What's above that? We have an order block or a breaker block. What's above that? I can easily draw my fib. Again, it just takes the finesse of it. And again, when you get, your practice in, you can definitely do that. But if you really look closely, this is the up move before the down move. Yes, we have an up move before the down move before that one, yes. However, that provided our choke. That provided our break of structure. Now that we have our strong low, weak high, price rated sell side liquidity, what's next? Buy side liquidity. If we raid our equal highs as well as our internal range liquidity, what's next? The block. And we definitely have a block. How do we know that this is going to hold? Liquidity grab, strong high. Strong high, weak low, continue high. That's your entry, 4%. Amazing. Moving on. Of course, you can hold it all the way down to internal range liquidity. That's up to you. I will not encourage any kind of set rules. These rules are to help you understand and develop your own, so you can do this by yourself, so you can actually learn with the channel, so you can actually learn with the membership group. That is really the whole point of this to teach people how to do this, because a lot of people are just being taken advantage of. I just really don't appreciate it. So yes, price continued, obviously rated liquidity, which happened to be equal lows, continued higher. Where is price's intended direction, or where is price drawing to? If we took out internal range liquidity and or sell side liquidity, what's next? Buy side liquidity, external range liquidity to an extent. But really, if we're talking about the range of the overall range of the market, strong, high, weak, low, it would be considered internal range liquidity. So internal range liquidity. How do you know that this is internal range liquidity? Trend line. Straighten it out. Equal highs. Equal highs. Is that not a liquidity pool, pretty much? That makes that it includes, or how do I say it? That implies that there are short and buy orders just sitting there waiting to be obviously rated. If you want to look above that, we have an unmitigated wick. Unmitigated wick. That's your entry. Amazing. You have a smooth 17%. Smooth 7, and this is a counter trend trade. Congratulations. Yeah, I mean, there's definitely a range here, this high to this low. However, when you're talking about like liquidity raids or liquidity grabs, for obviously buy stops or sell stops, it doesn't necessarily need a range. I feel like to an extent, the knowledge is self-explanatory. If you do understand AMD pattern or accumulation, manipulation, and distribution, I didn't go over this because I feel like, honestly, that's the new retail. A lot of people know the power of three, even if it's not necessarily the right way. They know the power of three because of what institutional trading or smart money concepts or however you want to call it. But it's a well-known thing, and I just didn't feel like it was, for me personally, I don't think it was relevant in my case because, again, a lot of people understand that already. And if you understand that already, congratulations. If you don't, leave a like, drop it down in the description below, and I would definitely go over it. However, I don't. It's very much important. I can't understand. I mean, I can't necessarily front. It's very much important. However, the popularity of it, it's. I mean, it's just known. You feel me? So I don't know. Yeah. So moving on. As you can see, price continues lower, rates internal range liquidity to the left, and provides what? A choke. You can think of this as the choke, or you can understand that this is an imbalance, and with that imbalance, a structural high is being broken. What does price do? Retraces for what? Internal range liquidity. Cool. What's internal range liquidity right here? I can definitely just as easily draw my fib down. That would give you your premium price. However, if you really want to hone your skills, if you really want to be well off in these markets, I need you to understand patience, right? Because when you really understand patience, you can understand how to comprehend the market and what it's doing, right? So we can obviously see that price performed a choke, retested. What people don't understand is this retest becomes obviously a target. Why? Because it's weak. Did this low take out this low? No. So it's weak. So if you wait, if you understand that patience pays in this game, you wait, what, this is the 30-minute, you wait 2 hours, we're up here now. You know, you wait 3 hours, we're up here now. We're taking out a break of structure. This confirms we have your choke and your break of structure. At that point, strong low confirmed. What are we waiting for? We're waiting for a liquidity grab. We have that liquidity grab, a break of structure that confirms our weak low. What does price do from then? Takes out internal range liquidity. What's internal range liquidity? Unmitigated wick. What's below that? We have a bit of an imbalance. What's below that? We have an order block. Smooth as day. An order block. Unmitigated wick, however you want to call it. And if you really want to be ambitious, take the whole thing. If you don't feel so confident, take the whole thing. But if you want to be ambitious, definitely, I know what I said. Give it a second. If you want to be ambitious, definitely try your luck. Take the risk and understand that as your stop loss, becomes a bit smaller or more small. The smaller your stop loss is, the more the payout's going to be, right? And where do you target? Stop loss below the low. Where do you target? Apologies. Target the high. So you can take partials right here. You can even take partials. Okay, so we have what? Accumulation, manipulation. Take your partials at this next high. And what do you already understand is going to happen after? Distribution. Why? Because what's sitting below these lows? A trend line. Straighten it out. Internal range liquidity is being what? Rated. What happens to be this internal range liquidity? If you look left, we have an order block. Pretty simple. Before I do continue, let's obviously go ahead and find this range. So we have a liquidity grab right here, break of structure. We have a liquidity grab. Yeah, we have a liquidity grab right here. Choach. It counts. So yeah, that confirms our strong low, weak high. Only thing left to do is retrace, take out internal range liquidity, react to our POI, set your stop and your take profit, target the highs for your partials. That's 10% already for your partials. Amazing. Now, let the rest run. Take 75%, take 80%. Let the rest run towards the highs. You're up 17. You already took 10%. Really understand how powerful this skill set can actually be. And, really, it is. It's very powerful. I do appreciate every one of you for tuning in. We kind of just went over this, I guess, uptrend, right? As well as, a counter trend or a few counter trends. I do appreciate, again, everyone for tuning in, learning with me, understanding these markets with me. If you haven't already, hit that thumbs up button, subscribe to the channel because we do aim to post consistently. I will definitely be launching a subscription-based membership in 2023. I will try another time. And if I get the same reaction or whatever, I'm going to just dead it, focus on the channel, and whatever happens after that, happens after that. I don't necessarily even need YouTube at this point. I am very much aware. I don't need to, provide a membership to learn this. However, if I'm going to teach it, I feel like I should be paid for it, right? Yes, no. It is a profitable industry, and I do want to help. However, I can only expand so much without, different streams of income supporting my, obviously, foundation, right? So I guess you could say maybe I don't necessarily want to teach for free, but I feel like that's with anything, right? Especially with knowledge that has the potential to change your actual reality to a certain extent. But again, people are going to feel how they feel. I honestly could care less because again, the knowledge is here, So it is what it is. Be sure to leave down in the comments whatever you liked or appreciated or learned from this video. I do appreciate hitting well over 600 subscribers. I am very much aware of my growth, and I am very much appreciative of everyone who clicked that button. It means the world. It means a lot, especially, me just starting on my journey, taking a leap of faith, kind of just understanding who I am as a person. I do appreciate every one of y'all for just, accepting me as I am. This is definitely a learning experience for me as well as y'all. And I just appreciate the opportunity. Until next time on Jody FX, y'all have a wonderful day.